U.S. Treasuries took February.
Listen up, Rebels. Rebel Leader here, and today we're going to talk about the recent major gains that we've been seeing in the stock market. You guys should be back to the February highs in your portfolio if you just held and did nothing. If you had bought the dip, you should be up tremendously. And this is the cycle again. You could have and you should have taken advantage of that dip because you knew it was going to come back to this point. And from here, I believe you're just going to keep going up. Can it dip a little? Can it dip again? Yes. Is it likely? No. Because now we're going to see it just keep going up. And in the stock market, things can change fast. And this is just a perfect example of where we see in a span of a few months the change of record highs to record falls, record losses. We're talking somewhere around 10 to 25% on some stocks just went down for a few months. It was a slow decline, and then all of a sudden, in this past month alone, in June, the start of the summer, now it's all the way back up, breaking even new record highs than we just hit in February. So this is the perfect example of why you should be taking advantage of all the dips in the market. And then now things change, and because things change, now those same stocks that you could have picked up, they're no longer at those low prices. Now you have to kind of see where else is the good value of stocks, and that's the entire game of the stock market. It's timing, but also trying to value these stocks and finding the undervalued ones. So now that the entire market is up, is it a good time to buy? The answer is yes. The answer is always going to be now is the best time to buy compared to a year from now, compared to 2 years from now. So hopefully you didn't miss out on the major gains you would have seen and the major dips that we've been seeing for the great prices. Revolve is now hovering around $70 a share. You could have picked this up for $50 a share not even 2 weeks or a month ago. A year ago, you could have picked this up for $10 a share or $20 a share. Revolve is probably one of my favorite companies right now, and it's probably my biggest gainer of all time. And it's something that I can look at, and I look at the business model, and I look at where it's going, and I'm gonna probably put in a lot more money relatively soon, just because I believe in this company. And I kind of want to double down in its growth over the next few years. So you missed the boat, but you didn't miss the entire run that it has to go in the future. That's kind of how you have to attack the stock market. And that's why you should be putting money in every single month, whether it's up, whether it's down. Because sometimes you can't time it, and it's always just going to keep going up. I also want to talk about GameStop today, because GameStop is now hovering around $200 a share. So where do we go from here? Well, this just past week, there was a lawsuit filed against Robinhood for some GME shareholders, a class action lawsuit, because they shut down Robinhood for a few days, again, early this year and sometimes last year. And it was a huge dilemma with Vlad Tenov really not coming out and saying that they did any wrongdoing. They were blaming the market volatility. They were blaming a lot of regulatory regulations that they couldn't maintain the balance necessary. But bottom line is that hopefully Robinhood will be held accountable here. But regardless, the most important thing about this lawsuit is actually in the court filings. It showed that GameStop was currently shorted as of January 15th. It was shorted at 225% of shares were floated. And that's a crazy percentage. Nobody actually knew the exact amount. People speculated it could be anywhere from 50% to 100% outstanding shares shorted that were floating around out there, and that's huge. Anything above 30% or 25%, that would be considered a real major. That would be considered one of the greatest shorted stocks, or one of the most shorted stocks in the stock market today. The fact that GameStop is well over like 5 times that, like it's a lot. It shows the volatility of GameStop, that it actually probably, the short squeeze has not even happened, and it's more about the fact that all of these Wall Street companies, they keep shorting the stock, knowing that it's already over shorted. So they're doubling down, and then we're gonna keep seeing this squeeze happening at $200. People are saying that it's gonna go up to $1,000. I can see it happen. I can absolutely see it happen with this new revelation that was revealed in this court filings. We can kind of see no other stock in the stock market can do this, and that's the reason why GameStop is being targeted, right? And it's so interesting to see, how Wall Street bets and this like Reddit army is now fighting against the Wall Street, main capital investments and hedge funds, right? So what I think everybody should do is, again, ride this wave with GameStop, get yourself a few shares, see where it takes us. But I think just follow the news where this where GameStop's gonna go, what happens in this class action lawsuit, and also in the next few months, I think GameStop is gonna see a little more of a short squeeze. We're gonna see a bigger gain than even where we are at $200 right now. And overall, the market, sentiment is great. I think the start of summer is helping. A lot of good numbers are coming out of there. Jay Powell, the Fed, came out, saying something about inflation, but the Fed has always helped, especially in the past year and a half, to curb inflation, and they don't really care. They just keep printing money. Whether or not it's a good thing or a bad thing, we don't really know until maybe a year out from now. It's really hard to tell how inflation is gonna affect the stock market. But right now, things are good. Market sentiment is up, and more so than that, we're seeing that things like an infrastructure bill, which wasn't even entirely unexpected. It moved the stock market just this week. This bill just kind of ramped up more so than and again, this bill, the news of this infrastructure bill, really boosted the entire stock market back up to those February highs that we were seeing, right? So now we broke through new records, and now the more good news comes out, the more we see government change and implementing new rules. The EV stock market is bound for a run-up. The big tech is bound for a run-up in the second half of this year. As soon as we get more news on these current lawsuits and regulations and what the government decides to do with interfering or not interfering in these companies, we're going to see in industries, we're going to see a big boost, I believe, in those sectors. And this is just forecasting for the future. Like, we knew going into this year that it was gonna be a slow start to a lot of these companies. It was no surprise. We knew the value stocks and big banks and money was gonna kind of rotate to travel stocks, kind of rotate into those, because of essentially COVID, still being trapped. Nobody really known when the vaccine rollout was gonna be successful. But now I would say it is pretty successful. I would say that things are getting back to normal, return to normalcy. New York City just opened basically all of its bars, restaurants, and open up the entire city. No masks, no regulations, even concert venues. So things are going well, and because of this, there's now even work from home. People are now going back into the office a few days a week. They're fully expected to return by September, beginning of fall. And just because we're seeing more and more this return to normalcy, I think there's going to be a huge boost in the stock market and the economy. And because of this, invest now. You might think, oh, record-breaking new highs. Well, that doesn't mean that it can't go higher. And in fact, if you look at any history of the stock market for the past 5 to 10 years, you can go 20 years, it always reaches new highs. That's just how the stock market works. Because again, it has to keep up with inflation, values change, and companies are always evolving, growing bigger, better, and they're working to, build their business and grow their business. Rebel Leader, over now.